Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is our Switch Markets Live webinar, How to Trade Crude Oil. Today, I'm going to show you some of the basic contracts of how to trade crude oil. We may break into a little bit of market profile analysis. We're going to talk about the trends that are developing and maybe some market drivers. But the big key thing that we want to cover today is how to trade crude oil. And I'm going to talk about the different types, the different contracts you can look at, all the different ways that you can execute crude oil trades. And if you have any questions at all, be sure to ask. This is one of those things that I would consider myself a specialist in a few things in life. And even though I have some connections, believe it or not, I've talked to a few folks out of the Middle East region today. I have some connections in the region. I have been trading crude oil since 2011. So I'm going to talk a little bit about what we're seeing now, how to trade it. And if you have any questions at all about anything crude oil, all things crude oil, be sure to ask me. We'll talk a little bit about my background in this industry, and then we'll also dive right into a few things that you got to know. If you're going to trade WTI, you've got to know them. So welcome, everybody, back to the trading room. Let's see, Tuku. Good to see you, Tuku. Welcome. Andrea Garwal, always a pleasure, Andrea. I'm confident everybody's trading is going well. Let me see, Bobby Bob. This week's trading has become the worst of the worst. This has been a bad one. This has been a challenging one. We were fortunate yesterday. I passed along a trade idea on gold, and that thing was a banger, but it was a real quick in and out scalp. We were in that thing about a minute and a half, if that, because essentially it was a long scalp from a support zone, and we've seen just an absolute epic crash right now in gold. Right now, the biggest thing to think about if you're trading is you don't have anything to hang your hat on. All the correlations have broken down. There's one correlation right now that you should be thinking about. Forget the dollar correlations with metals. Forget that for right now. Forget about pretty much everything except that one correlation, crude oil. When crude oil goes up, stocks go down. And right now you're seeing WTI crude futures up about 1.6%. The rest of the table sort of flat. UK oil's flat, US oil's flat. But that WTI futures contract is up, and that's putting additional pressure on your US equities indices. Incredible stuff happening right in front of our eyes. It looks to me like we're getting ready for something big to happen in the Iran theater. So good to see you, Ralph H. Welcome. Welcome out there in YouTube land. Marvel Expendables. Good to see you, Marvel. Welcome. Let's see. Jason Maxson. Sup, Jason? How are you? I'm doing well. Joshua, good to see you, Joshua. I think that we're going to have an opportunity here to do some great trading. I'm going to be back tomorrow with more of a normal live stream where we're going to cover the markets. We'll have a trade ID out later today, and it's going to be on the dollar yen. There's a key level coming into play there. But other than that, all right, let's go ahead and get into our crude oil, sort of our crude oil tutorial. Now, remember, if you want to trade crude oil over at Switch Markets, they've got you covered. They've got all sorts of commodities there. But you can see you've got WTI, you've got CFDs on futures. I'm going to talk about that in just a second. You've also got Brent crudes in here somewhere, Brent crude oil futures, and you've also got Brent on spot. Other than that, there really isn't much left to trade other than those contracts, and I'm going to show you exactly what I trade, the contracts I focus on, and where maybe you should be focusing a little bit of your effort in the crude oil market. So let's go ahead and get started with the webinar, the tutorial, how to trade crude oil. So a few years back, I was just getting started out, and I came in to this business as a live streamer and a trader, as really a crude oil expert. And that's sort of what I do as I trade crude oil every day. I look at the charts. I make decisions. It's been a challenge. I've throttled way back in March. Because the volatility isn't really what I do. Now, there's ways to trade it and pullbacks and all these things. We could talk about it. But essentially, a few years back, I was tasked with, hey, make a video on crude oil. We want a video for our Forex Signals TV. So this is an old channel. Don't really post there anymore, except we post our live streams there every day, or except this one. This is exclusive for Switch customers. But check out Forex Signals TV. And over there, all you do is just run a basic crude oil search. That's it. Go to videos and just search for how to trade crude oil. And it'll show you exactly these videos will come up. So I've got a couple of shorts, best WTI crude oil trading timeframes. I'm going to cover that in a second as well. How to trade oil like a pro, the fundamental and price action strategy. If you haven't seen that one, check that one out. That's about, 10 minutes or 15 minutes of a video that's going to show exactly how to trade it. It's going to get you the contracts. It's going to talk concepts. I put a lot into that video, so go over there, check it out. It's a pretty good place to begin your education for crude oil. And then right there, we've got another short there, a price action strategy promo. The biggest thing I want to stress with crude oil is that we're in it every single day. We're in it because it's volatile, it moves, That's why we're there. It's often called the Wild West of oil trading, or excuse me, it's called the Wild West of trading. That's what crude oil is. It is the Wild West. Now, there's markets out there that are crazier, but back in the day, this one was the craziest. Crude oil was the craziest. It was the most volatile. Now, you've got things like the E-mini NASDAQ futures that are absolutely insane. I trade them sometimes, but very short leash on those. And then also, you'll see sweeps in the natural gas markets that are huge. So this is the Wild West, but we're there because there's volatility and participation every single day. That's why we trade crude oil. All right, the key contracts, let's go ahead and break these down for you. We've got some spot contracts, WTI and Brent, and those are going to be, I'll show you where to find those on the your MT5. And then futures are going to be the CL and BRN. So the futures contract for WTI, which is West Texas Intermediate crude oil, that is crude oil that's delivered in, I believe, Cushing, Oklahoma, and that's the U.S. benchmark, but it's one of the widest traded energies contracts in the world, if not the widest traded. WTI. Brent, North Sea Brent. Now, that's all the oil that they're taking out of the North Sea oil fields up above Scotland. That's the international barometer. So when you think international market, think international crude, you're thinking North Sea Brent. When you're thinking U.S., maybe U.S. exports, the U.S. benchmark, you're thinking West Texas Intermediate. Now, both are forms of light sweet crude, which means they have a lower sulfur content, which means they burn faster. They don't take as much refinement. That's key. That's what we're trading. We're not trading, we're not trading oil sands, bituminous oil sands. We're not trading those because those take longer to refine. A lot of the oil out of Venezuela is a lot heavier than the light sweet stuff that we find out of the fracking wells here in the United States and also in the Middle East. So that's the big difference in types of crude oil. And the reason why we trade this light sweet crude oil is because that is the stuff everybody wants. That's the stuff that we're going to always be looking to get. Not necessarily this oil sands up in Canada where it takes a lot of refinement. It's called a real dirty oil. Well, that stuff takes just a ton of time to really bring to market. Light sweet crude you can bring to market as gasoline or diesel very quickly. So that's one of the things we need to sort of understand about crude oil and why the light sweet WTI and Brent, those are the benchmarks. That's what we're trading. All right, so we have a couple spot contracts there, WTI and Brent. These are relatively simple to find. You got your WTI contract right here on your MT5 platform. You're going to go to your market watch, and you just click right in there to add and just go with a WTI, and you'll see that's the spot price for WTI light crude oil. Now, if you want to get a futures contract, no, we just got a buy signal here that came up in Brent. No kidding. As we're speaking, interesting stuff. Well, maybe it works, maybe it does. Let's go ahead and take a buy. These got crushed yesterday. I'll go ahead and let that float. Stop loss. This is our 9 EMA strategy. I'll just go ahead and take a real tight scalp here on that spot Brent contract. So essentially what we have, the difference between futures and spot. The difference between futures and spot is that spot is just priced a little bit different. Spot markets are going to be what we can go down to the depot and buy a barrel of oil for today. That's what a spot market is. A futures market is what it's going to be at a future point in time. So right here, let's say that's a WTI, that's a spot contract. Brent is just going to be BRENT, and that's going to be your Brent spot. I know we're getting a little bit mixed up here, but there's so much information that we need to cover. So essentially, that's what you do. So there's your Brent, and there's your WTI. WTI 1 minute chart, Brent 1 minute. Is it a good idea to be trading these on 1 minute intervals? I think it's highly risky. The only good thing is when you lose, or if you lose, you don't lose that much. So I wouldn't really be focusing on time frames this small when it comes to these contracts. But the 9 EMA strategy, we've covered that a lot. So hey, we got an alert. We figured we'll go ahead and take it and see what happens. We lost a few yesterday. Probably that one right there is going to lose as well. So we'll wait and see exactly how that pans out. All right, so you do have futures contracts. Those are going to be the second type of thing that you can trade with regards to crude oil. Now, the symbols that you need to know for futures are going to be CL for WTI and BRN for Brent. Now, those are important because if you're going to look up these symbols and you're going to figure out where to trade them, you've got to know what exchange they're on. That's very, very important. So let's go ahead and we'll start off with WTI. WTI crude oil futures are available at the CME Group Exchange. Now, the CME is out of Chicago. Originally, the CL contract for WTI it was run through the NYMEX, the New York Mercantile Exchange. Over time, the CME Group has bought all of them. They've bought the COMEX, the NYMEX, you name it. So originally, the pit traders used to trade WTI crude oil on the floor in New York City. That's sort of where I learned. I learned from guys that did that. My Uncle Gary, he was an upstairs trader for Shell Oil and also Northville back in the 80s and 90s. And so he was he was an upstairs trader, so he wasn't in the pit, but he worked closely with the pit guys to make the market for the world. Nowadays, we do all that on our screens. We do all that electronically, and your WTI crude oil futures are through the CME, but they actually still are considered a NYMEX product. So just sort of it's minutia at this point. But you can see that these contracts really set the stage for everything to do with WTI pricing. So you can see right there your Globex code is going to be CL. So that's going to be CL, and then K is going to be for the month, and the last number 6 is going to be for the year. So what is that? What is that K is going to be? I even forget what the K is. What is it, April or May? It's probably already May, I believe. Let's take a look at our quotes. We'll show you exactly what's important here. Okay, so right there we've rolled to May. CLK6 is going to be the May contract. The biggest thing we always have to remember about crude oil and trading crude oil futures is you always trade the front month. Now, investors, hedgers, they're looking at deferred month. You can see all these are contracts traded. They're doing this down the road to hedge their downside risk or maybe lock in profits. So when we're looking at, for us, active traders, we're looking for maximum liquidity and we want to see maximum volatility. That's going to be in your front month. That means those spreads are going to be almost non-existent in WTI crude oil. And you're also going to have an absolute lot of opportunities potentially to get involved in the market. So I like that. May WTI. That's what we're trading right now. So that's through the CME. Now, Brent futures is different. That's through ICE Futures Europe. This contract it's widely traded, but it's not necessarily hugely popular among folks that are in the retail space. The reason why it's not is because the liquidity isn't really where WTI's is for day traders and scalpers like myself. And also, you have to get a different data feed. You got to get the ICE Futures data feed, which I think is it's a pretty good fee each and every month. So that's a lot of folks here in the United States I know are focused on WTI. Most day traders around the world are trading WTI futures. Now, we're going to show you some instruments where you can trade Brent just as easy, especially if you've got that CFD market access, which is fantastic. So this is a good look at a contract that a lot of people focus on. They look at it, but they don't necessarily trade it. And that's called Brent Crude, and that is through ICE Futures Europe. So let's get out to price action here and take a good look at what these contracts really are. So right there's a CL contract for this month. This is the WTI contract for May. We just showed it to you. This is the CME contract, and you can see it's been an interesting month, hasn't it? Up about 45%. What do we open trade at? $73, and our high was somewhere up around $113. Now, the biggest thing to remember about futures in a futures contract is when you're trading futures, you're pricing the underlying asset at a specific point of time in the future. So when we say we're trading May futures, May WTI futures, we're looking at maybe taking a physical delivery of this contract, this allotment, which is 1,000 barrels. You're going to look to take control of that in May at contract expiration. It doesn't really mean much if you're just a retail trader looking to make a few ticks and pips. We're in and out of these positions so fast, we don't worry about physical delivery. But you always want to trade the most liquid contract that's listed, that's on the board. That's going to be your May contract for right now. So you can see we've got absolutely huge volumes for the month. We've traded 6.61 million contracts, which is staggering. You figure out the exchange is making what, $3 a side on those 6 million. Not to mention the price action. It's a tremendous windfall already this month. The biggest thing that I would say about this type of chart is that it really truly is an outlier. Now, we'll get in the Wayback Machine with our CFD products here in a second because we'll show you the complete historical data set going back to, however far we go, 20 years or whatever. But this right here is truly an epic an absolutely epic move in the oil markets. Something we haven't seen in quite some time. So that's WTI. Here's Brent. Here's a good look at Brent. Now that's a weekly chart. You'll also see right here for the monthly. Huge gap up this month, up about 50%. So that's essentially what it's looked like, what these futures contracts look like right now. We're both trading May, which is absolutely fine. A lot of times these front month contracts are in fact the underpinnings for your CFD contracts and also some of your CFDs on futures. We'll talk about that in just a second. So if I'm looking at crude oil here, WTI, we're going to talk a little bit about the schematics in just a second once we get your contracts laid out. But there's so many different ways to trade crude. I'll show you a few ways that I do anyways. In any case, our key contracts, those are our futures, CL and BRN. CFDs on futures. Now, there's going to be a couple of different ones here. Let's go ahead. We're going to get back over to our MT5, and I'll show you these contracts directly. You can see that you've got BRN right there. So what you've got to do is you've got to just type in BRN, and you're going to have your contracts. In order to always be trading the one that's on the front month, you're going to have to go probably over to the ICE website and find out where the volume is. Sometimes you can program MT5 to sort of alert you to it, but essentially you're going to probably need to go digging for that volume information. So BRN would be Brent, and you can see we've already got this one lined up on the May contract, and that's sort of where our trade is. So that is what we call a CFD on futures. So the underlying asset is the futures contract, but it's a CFD based on that futures that tracks it exactly. So that's called a CFD on futures contract. And then CL is going to be our other one. You can see we haven't quite updated our CL. So let's go to CL, and we want May. So let's go ahead and hit May, hit the plus sign, and there you have it. So they're right there. Let's go to our WTI 1 minute. There's our spot, and there's our spot, and those are our futures contracts. Relatively simple. The biggest thing about futures, always be trading the front month, even if you're trading CFDs on futures, which is offered to you over here at Switch Markets. Now, the last one, we just talked about those CFDs on futures, but depending on which brokerage you're with, you are going to have options. There are going to be different options and different ways to trade WTI crude oil. This is called essentially just a CFD product. It's a CFD on WTI. It's called U.S. Oil. This is a very popular one. This is one that we cover pretty much on our live streams every day. It's definitely important to sort of differentiate between the switch offering and this offering, because you're going to find from broker to broker, especially with CFDs, the pricing is going to be a little bit different, but it should be tracking that front month underlying futures contract very, very closely. So when I look at the U.S. oil contract right now, we're printing 96, 67, 97, and my front month WTI contract is just about 96 or 97. All right, that's great. That means that there's not much tracking error there, and we're in. That's U.S. oil. UK oil is going to be for Brent. 109.48, somewhere in there, and you can see right there that there's a bit of a difference here in this Brent contract, so be careful when you see that spread. So 50 on this UK oil, and then with Brent, 109.67. Maybe in the midst of rollover, that broker may just be doing something different with spreads. Be aware, though, the price action should always look the same. You should never go on a U.S. oil chart and look at the futures contract and go, well, the futures contract is down, but U.S. oil's up. That should never happen. These contracts have to track. And if they don't track, that means you're trading the wrong thing, essentially. So you definitely want to be aware of that. Like this Brent over here is about 109.44, 43, somewhere in that zone. It's going to get stopped out too. And then right here, UK oil is trading about 109.40. And then Brent, the contract itself is at 109.70. So we probably would have to look for another contract. Maybe we're still trading April. That's certainly possible. But remember, you go to where the volume is when you're trading futures. CFDs, it doesn't really matter. CFDs are always going to roll over and track the front month as we move forward in time. So let's take a look at this in our Wayback Machine for WTI. Okay, so this is going back to the 1980s. And you can see that crude oil really wasn't worth a whole heck of a lot, in sort of the dark ages before. What happened here? What happened in the 70s? Very similar situation to what we're seeing right now with the Iran war. What do you have there? You have a price that jumps from $10 or $11 a barrel all the way up to about 14. Now, it doesn't sound like much, but that's a 50% gain in just a few years. You can actually see the big price action. I believe this was the 3-day war. Somewhere right in here. Notice how thin everything is. It's because the market was absolutely crazy. Then we get more established and the crude oil futures come into play somewhere right here in the early 80s. Right here, these are just spot values, crude oil futures, and then you start to see the price action really begin flowing. We had sort of a crisis here, 1990, a big crash in Europe. This was your first Gulf War, essentially the precursor, but you also had a market crash in Europe at the time. So you had a big rally here. So that was sort of a nice history lesson on what can happen on the first Gulf War. And then what happens in here, then you just get the massive, I guess you could just say this right here is when the second Gulf War started. And this was the tumult, the result of all the tumult, all the Afghanistan, all the Iraq, all of that stuff right there. And then you see the big rally. And this is during the financial crisis. So you still had some ongoing wars at that point, and you had a financial crisis. And then the bubble sort of popped. It was absolutely crazy. This was basically the beginning of Arab Spring right in here, right in this '08 area, somewhere right beginning of the financial crisis. And then we get down into here, 2011, this area right in this zone. This was your Arab Spring, which was back about April of 2011. The volatility that we're seeing now is a tremendous degree higher than what we saw then. And you sort of saw what happened back in 2020. COVID went to negative $40 a barrel. Now what do you have? You got a high right here, Russia, Ukraine. And now what do we have? Very, very similar price action to where we were on the Russia, Ukraine. So you can see the ebbs and the flows and just how big of a deal crude oil can be. Typically, when you see this type of price action, bullish price action, it forms a negative correlation with your equities, and that's exactly what we've seen throughout March. This is turning out to be a historic month, not just for crude oil, but also for equities. So that's a good look at U.S. oil and a few long-term pricing trends. And there you have your CFDs and everything pretty much ready to go. Now we're going to get into some active trading. We did take that 9 EMA trade, 1-minute chart. I highly just discourage that. I think that's really difficult to do with crude oil, especially this time of day. If you're going to do that, you do it early in the day. But see if there's any questions out there. I got way behind. Say Marvel, absolutely good to see you. David, good to see you, David. Welcome. Let me see. Please, do you have a Discord channel for your traders? I do not, Marvel. I don't have a Discord channel. We're thinking of starting one up, but maybe we'll start one in the future, but I do not have one. Let me see. Hey, David, there's on Forex Signals TV, you say to use the 4-hour, 30-minute, and 5-minute, but the original video. Yeah, David, I didn't quite get to that. I'm going to have to look to it. I could not find the video. I think they just got rid of the video. I looked into it yesterday, but I couldn't find it, David. So, I mean, I guess we're just going to have to move on. I don't really know what to say, but I hear you. 26th of November, there's a YouTube short on Forex Signals TV. You say use the 4-hour or the 30-minute and 5-minute, but the original video, the short is cut from is deleted. How do you use that? Yeah, I couldn't find it either. I don't really know exactly where it is. If it's not on that same channel, potentially you could look on the How to Trade channel. I don't think I did anything on multiple time frame analysis there, though. All right, let's do a little crude oil trading here, and what we're gonna do here is I'm gonna sort of show you some of my playbook and the way that I like to approach WTI crude, because it is such a volatile market and there's so much action, especially right now. Is I like market profile, and I also like things like pullbacks and things. So if you were going to do a multi time frame analysis here, what you could do is you could go right here to say, I don't know, let's start off with a weekly. We already know our monthlies. I mean, we could pull up a monthly chart, and I could definitely give it to you here. Spike low, spike high. My first key level I'm looking at is 91.10. That's a big deal. That's an absolutely huge deal, especially if you're talking about maybe bidding a pullback. So I would have my eye on 91.10 like it was my religion. I definitely would have that. So when I go down from a monthly, I'm going to a weekly. Okay, you can see the weekly, you already pulled back this week to about 91.45 and bounced. That sort of proves the validity of that level. So I'm looking at this saying, okay, the breakout is on, the trend is still up. What does that mean for me maybe on a daily basis? What does it mean for me on an intraday basis? You can see this level has been absolutely huge for 1, 2, maybe a third or a fourth time. Keep your eye on the $91 level. That is epic to the downside. Bidders have been there, and they've been there, and they've been aggressive. So watch that level. That's the first thing I would look at. So the second thing I would look at is I'd say, okay, what we have here, we're up about, 0.5% on the day, so we are coming off just a little bit. The biggest thing I like to do when I'm trading crude oil on intraday time frames is establish when to trade and what time frame to use. And what I always say is I highly recommend trading when this market is at its hottest. When is that? You can see it very easy. It's when the crude oil, when the volumes pick up. Now, theoretically, with this, as heavy as the volumes have been, you probably could be trading, realistically, you probably could be trading from the London Open on short time frames and be okay. But this type of stuff here is what we want to avoid. You want to avoid that. You're going to get chopped up. Believe me, there's not much happening in there. You want to be trading when these ranges are opening up. So typically that is when the volume kicks on. For me, the absolute best time you're going to be doing this is right in here. From about 9 a.m. Eastern, I'm on Mountain Time, so about 9 a.m. Eastern all the way through about 2:30 p.m. Eastern. So your trading day essentially is going to be this. Remember, my times are 2 hours back. So this is sort of what I'm looking at. That's my time zone. Why would I want that to be my time zone? Because I want to be trading when the volumes are there. I want to be trading when the volumes are hottest. Now, clearly something happened in here. There was a news event. My guess is it was something out of Iran. Maybe some more oil infrastructure got hit. So you definitely are going to want to be extra vigilant when you're talking about trading WTI crude in this environment. Have a news feed going. So if I'm looking at this right here and I'm saying, okay, we opened a little bit higher on the futures market. We're right around even. Now the market's starting to come our way a little bit. We've already identified our long-term level support zone. That's the premium trade I want. That's where I want to get involved in. That is exactly where I want to be bidding and doing business from. There's no question about it. So I'm not really interested in bidding right now. But what could I potentially do? What are a few levels I should be looking at? Well, right there's your New York low. There's your open, your NYMEX, traditional NYMEX open, about 30 minutes before the cash open. What's that low? That low right there is 95.36. Okay, that's absolutely huge. So if we're thinking about maybe playing a breakout, it's probably going to have to start beneath 36. Market's very, very tight during that U.S. session. You'll notice that we just sort of whipsawing around. If I wanted to play a breakout there, that's what I'd be looking to do. So I would have my orders, pull up my trading dome. Typically, I trade WTI crude on a dome. This is what I do. I sit there, I watch price, I watch it move around, I watch the bids and the asks, and see exactly where the action is. So let's say I wanted to play a breakout here. The low, New York low's at 95.36. I would come down here to about 95.35, something like this. Let's see, one contract. Well, this is going to be tough. Let's go with an order. We'll look to sell. We'll use a stop market order, 95.35. Typically, leverage is going to be $10 a tick if you're trading that futures contract, something like that. Let's go ahead, trade 4 contracts and see if we can get in on that sell, maybe that little washout there. Now, is the market coming our way? Yeah, it is. It's moving around. It looks like it wants to move and really open up to the downside. Now, typically, I'd use a stop limit order there. I don't want to get too advanced on the order types because they can be a little bit convoluted. It can get very difficult. So if you're using a stop order, that's going to be a stop market. That means as soon as that thing's hit, it's going to fill you at the best available price. Now, as far as our stop limit order, that's going to give us a sort of a variance. You're going to sign a 1 or 2 pip limit to what you'll accept as slippage. So you definitely want to do that. So if I'm looking at this, might take profit. We could play a little washout somewhere right in here, 95.35. Let's go ahead and just play for maybe a 92. No, we don't want that. We want 95. I don't know, somewhere in there. 95. Man, this is hard, just eyeballing this. Let's do something like that to 21 and see if we get it. Okay, if we're going to get filled up, let's take this to a 1 minute. And what you're basically looking for here is a little bit of symmetry. You want to see this break and really run. Right now, you can see we went right down. Okay, now we're short. We got a little bit of a wash out there, but we're starting to rotate back up into the guts of the range. Now we're seeing that follow through. Now the market's going to run. The market's going to run. We just got hit and we didn't get filled. So what should we be doing? We should be on the phone yelling at our broker, and then we got filled up right there. So that is as fast as I can really explain a WTI crude oil trade. That was a breakout underneath the New York range. That's a strategy that I like to use sometimes when the market's really active. You saw exactly what happened. The volatility spiked once we traded underneath that 35 level, and it filled us up beautifully. We can get away with trades like that because the market's hyperactive. If the market's not hyperactive and it's slow, you're going to see rotation and you're going to get blown out of the box. So let's go ahead and take a little bit of a look at our history here. I don't know, what do I have rolling there? The US 30? Yeah, let's leave that rolling. Order history, balance history. Okay, so that's our trade in a nutshell. Right there. That was $560. That was a legitimate trade. These are demo dollars. I don't want anybody to get carried away, but that's a legitimate trade that you could take maybe with a prop account. Now, the beauty of this is some of these are epic. Look at these. Some of these positions are fantastic. Some of these, though, that's a nice intraday scalp, $560. Not bad at all. That's a legitimate trade. That's what crude oil day traders attempt to do, and that's why they trade crude oil, because of action just like that. We were in, we were out. It was beautiful. Very, very simple. Very, very simple to do. Trading dome, short time frames. You're trying to identify where the soft spots of the market are. Now, let's say, for instance, that I want to go into this late session, and I don't really have any idea. I've got about another hour left. 30-minute chart is a premium chart. It's definitely a premium chart. We found the range using our 30. Now we're sort of breaking out a little bit, rotating back into this value area. It's a big one, though. It's all the way up there right around 100, somewhere in that zone, all the way down to 95. This is a $5 range in just about 2 hours, which is a tremendous amount of volatility intraday. If I was interested in trading my TPO charts, let's get rid of that trading dome. I don't think we need to execute. Three numbers you need to know. You need to know the point of control. That's where we've been doing business. That's where business has been done. The majority of volume has been traded at what price point? Your point of control. That's right around 96.38. As you can see, we're thinking about going up and maybe kissing that point of control right now. So we caught the washout. We took just a few ticks. Our low there, we were selling 35s. Low was 95.12. We took the money and boogied. There's nothing wrong with that. Now the market's coming back against us. What do we want to do? Do we want to step up and scalp? Well, we know we've got our point of control, and that's the beauty of using Market Profile this late in the session where you only have about an hour left to trade. We know exactly where everybody's doing business. Exactly where everybody's doing business, right there at 96.38. So I've got all sorts of opportunities. I've got my value area high. That's where a majority, this is sort of, think of it as a bell curve. I'm always showing you bell curves on your CME FedWatch stuff. That's sort of a bell curve. It's just on its side. So this is where all the business has been done today. Where is it between? This dotted line is our value area low. Value area low is right down around 95.51. Okay, we just tested the waters beneath value. Now we're rotating back up into the guts of this thing. Value area high is what? 97.50. So the majority of our business has been done today in crude oil, 97.50 right down to about 95.52. That's a $2 range. I've got a point of control right there at 96.36. Price is going back to our point of control. Now, will our point of control be support or resistance? Well, in this instance, it may actually set up to be resistance. So we could take a little Fibonacci from really our session high to our session low. You can see 38% right up in there. That's not great. This is sort of something that I don't do often, but our value area, something like this, a Fibonacci, potentially from our low, but you could also use it on your value area. And what do you have right in here setting up? Got a little zone that I would be watching as topside resistance. Now, I don't want to get too far into those concepts. Honestly, you'd have to make a video series to really do the whole subject justice. But I was asked, Shane, how do you trade crude oil? I was asked that yesterday in a one-on-one with a trader. And I said, this is how. This is how. I'm always looking for points of control, value areas. And, of course, we use our long-term Fibonacci's, our multiple time frame analysis, and we can play breakouts with ranges. We can do all sorts of different things. So trading crude oil is a lot of fun. It really is a lot of fun. As far as some of our canned strategies, I call this a canned strategy. This is something that really anybody can learn to execute, our 9 EMA. If you're using this on a 1-minute chart, and you can see we sort of had some bad luck yesterday. It wasn't really that great. We just didn't get filled. If you're going to be using it on really short time frames, you've got to focus on when business kicks off. You need to have good volume, good steady volatility so you can get these kinds of moves, unless it's going to be really difficult to be profitable doing this on a real short time frame over time. So what I would be looking to do is maybe if I was trading this 9 EMA, maybe I'm looking at 5-minute charts during that key session that I just showed you, which was about 9 a.m. Eastern to about 2:30 p.m. Eastern. And honestly, I would cut that in half. I would trade it from 9 a.m. Eastern to about 11:30 a.m. Eastern. And that's when you've got max participation for this WTI contract. That's essentially what happens when you spend 14 or 15 years of your life looking at these contracts. You sit there and you have a pretty good understanding of what's going to happen here. I mean, that's a really advanced trade, playing that washout, because we're not really trending and the overall sentiment's bullish. And you telling me you're going to sell? I said, yeah, why would I sell beneath New York's low? It's because there's a hell of a lot of stop losses down there, retail traders. But I didn't pick this. I didn't say, hey, we're going to completely reverse and go down. Didn't say that. Right now, we're working on going up and touching our point of control, which shouldn't really surprise anybody when we're only 0.66% in the green. It really is a rotational day. It's just the ranges are so damn big that you can take, what do we take, 10 points off that back end washout? Those are high percentage trades, high probability trades. It takes a while to be able to do that stuff, to learn how to do that stuff. So if I was looking to make a trade right now on this WTI contract, I've got my point of control right there at 37. I don't particularly love the trade. If I wanted to take a high-impact scalp, I could go limit order right here at 37. About one tick underneath our point of control. And the idea would be very simple. You would be looking to execute, maybe grab 4 or 5 ticks to the downside and just hit the money, take the money and run. You can certainly do that. The biggest thing you can't do is let that one draw against you. If you get caught on the wrong side of it, if the situation, if it doesn't work, I mean, we can execute it. Let's go right here, 37. That's not what we want. That's what I want right there. Okay, so let's go ahead and sell this point of control and see if we get this to actually develop for us. For right this minute, what would I be looking for? Let's just look for maybe 5 ticks, something like that. It'd be a $200 trade. See if we get it. Now, it looks to me like we're going to rotate up and get that point of control, which would be fantastic. I get asked time frames all the time. I'm actually being asked time frames there. What you're going to want to do is you're going to want to dial in my basic analysis on a crude oil chart stems from a 30-minute. Now, all our long-term macro levels, we go monthly levels. We showed you that 91.10 a minute ago. Macro levels are huge. Weekly levels are huge. Dailies, those are ones you're going to see in my trade ideas that I put out, because I know that if those levels come into play, those are high probability. Now, the success trading something like this, trading a TPO chart or a market profile approach on an intraday basis, your success is going to be all about how you manage these trades. You've got to be able to cut off the losers, and I don't even recommend letting winners run. A lot of people do. I'm just into tick scalping. So if I could get a test of that 37 level, I know we've got a pretty good opportunity to get 5 ticks. I just don't know that we're going to get it. And you start to see exactly what's happening to the market. We rotated back up, and now we're coming off, and we just may not get it. So that's part of just being patient. And, it's just the life of, an active trader. They pay you to wait. They don't pay you to trade. But I would work this 30-minute chart and a 5-minute chart. 5-minute, we would be doing something different and maybe take it down to a 1-minute just to get some trade location. Just some trade management, some inkling of what's going on with regards to current price action. All right, let's see. Marvel, Sniper. Yeah, we nailed that one. Been doing this for a while, Marvel. That's for sure. Bobby Bob, good to see you. Timer 55. Gold is killing me. All right, we'll have to look at gold. So that's essentially, I'll run through a few markets right now that are interesting. That's about it for our webinar, though. That's crude oil trading, the tip of the iceberg, the very tip of the iceberg. I think that, you could sit here and I just look at the markets like a puzzle. Crude oil gives me an opportunity to win every single day because it moves. And a lot of you, I notice you're getting caught up in markets like, Euro, Great Britain, Pound. I put a trade idea out. I don't even know what's happened with it. You trade some forex pairs, and forex is really slow and methodical, and the crude oil is really fast. Really fast. You sort of saw the rhythm of it. It's really fast. And I like that about it. I find that my trading is at its absolute peak and its absolute best when I don't have to think. As soon as I'm just reacting to what's happening to the market and I'm seeing my levels and I'm watching price action, I'm taking trades, then I know I've got a great opportunity potentially to succeed. And after a while, if you're in this business long enough, you're in these markets long enough, that's where that eventually you'll get there to where you'll feel it. You'll say, this is all about rhythm. And you'll know when you're in a good rhythm and you'll know when you're not. Now, this week has been excruciating to trade. There is no rhythm. There really is no rhythm. It's been a real challenging time in the markets. We put out a few trade ideas yesterday. I want to show you key levels here. We'll go over gold, and then I'll go ahead and call it a day. But I know a lot of you are trading gold, and so I have to answer Timer 55's question. Shane, gold is killing me. Gold's killing everybody. Let's go ahead and break down the level you should know going into tomorrow's session. We might put out another trade idea here. This is a big time level. This is a big time level. You can see going back to the negative print of 2024 November. What happened then? It was election time, so you had a bit of a pullback and then compression. Then we're off to the races. We compressed all last summer, and then we made the next leg up, and now we made those all-time highs, and we are coming off in a big, big way. The next level you need to know right now, 44.28, down around 44 and a quarter. That is big. If we go down there and test that, more than likely you're going to get a pretty healthy bounce off of that level. Definitely be watching that one if you're a gold trader. Now, what we did yesterday, we had a trade idea out, and I want to just go ahead and go over this because it was a pretty good one. It wasn't necessarily that we're going to dwell on the winners here. I'll go over this again tomorrow, but essentially what we had was a Fibonacci retracement sequence, which was right from that spike low to that spike high. So you can see we got a pretty healthy bounce off of 38%. We covered that. I don't trade 50%, but our other entry was right in here, right around that 47. I believe we bought 47.92.50s. Let's go ahead and dial this in. Dial it in exactly. The high up there is 54.19.37. And these might be a little bit different than the numbers that you have on your charts. That's because the brokers and data feeds are all just a little bit different when it comes to CFD and spot gold. 44.02.83. Okay. So that was our level, 47. Our entry was 47.92.50. What was our exit? Wanted $5, so 47, or excuse me, 47.95. No, 47.97.50. So that was it. Let's get our way back machine, see exactly what happened here. You can see the market has absolutely crashed. So you're always going to get those, well, that one's a horrible loser. But this is one of the reasons why, if you're conservative about what you do in the markets, you can have an opportunity to win. So you see this right here. We sort of had a proximity test, didn't get in. We got in right here. This is a 30-minute chart, and it absolutely crashed, right? Well, there's so much action and there's so much volatility in this market that if you're just reasonable about what you're looking for, you can take what I call high probability setups, even if they're against the trend. Now I see a 1-minute chart and market absolutely crashed, and it did. It absolutely crashed. But take a look at what happened here. First approach. Boom. What's the low there? Low is 47.91.53. Look at this. What's the high? 48.02. That trade was an absolute banger for $5, which is about 500 pips. That was an absolute banger. So when you're dealing with a spread that's 100, I understand you're not really getting paid off a huge amount, but that kind of trade right there is absolutely fascinating, and it's one that you start to see these in these big dumps, these high probability trades set up as long as you're not trying to pick the direction of the market. That's why we really talked about the propensity or the ability for this thing to break. I mean, we really did. We said, hey, listen, weekly chart, take off everything. What was this right here? Compression week, inside bar. Talked a lot about this trading beneath that bar, breaking beneath last week's low, and then taking out what, your monthly low? Boom. There's your big miss. There's your 8% loss in your big print. So when we step back and we say, Shane, what's going on here? Do I want to buy it or sell it? I said, well, there's all sorts of different ways you can look at it. You could certainly change your mind and sell. I wouldn't really have a problem with it. Something like that, 47.07, probably going to be a pretty good scalping area. What you don't want to do is take a position from this thinking that we're going all the way down to 4,000 because it just might not develop that way. And this market's so volatile and long term. Think in terms of long term. I mean, monthly chart, that's our macro level. If you're waiting for a trade in gold, there it is. somewhere right around 44 and a quarter. Keep an eye on that. Dial it in exactly if you're going to use Fibonacci's. But that 38% level, that's the big one. That's the big dog. Now, if that's taken out, then we're coming off. And we're coming off in a big, big way. And that's one of those things that we cannot get in the way of these markets. They are too big. They are too volatile. And they will sweep you up. And you will be left in the dust fast. So you've got to make sure that you just don't lose your whole account on it. As far as intraday scalping, on this contract today, 30 minutes. I mean, I can see why you got chopped up. Nice big move. It's just, God, that's dreadful. I mean, you don't wish charts like that on your worst enemy. Look at that. I mean, that is absolute. Take a good look at what's going on right there at about 4,600. I don't want any part of that. Very confident we win here. We won up there at the weekly level. Once that 62% level was gone, you saw how much the market just fell away and wiped the whole wave out. Now you have to step back on your time frames and say, okay, if I want to get long this market, can I buy right now? I don't advise that, but if you want to, go ahead. It's just your stop out probably is going to be beneath today's low. A lot of traders are going to do that, and you're on the hook for almost $100. Right here, I know that if I get a run down to about 44 and a quarter, maybe 44.30, 44.35, I know we have a high probability of getting a bounce from there, no question. The real question now is, what do we do for the time being? This type of formation, stay out of it. Stay out of it. It's really hard. I know, really hard. All right, everybody, I'm going to go ahead. Let's see. We have a couple questions here. If there's any other questions, I'll be sure to cover them here. I know I will get there. You'll get there, Expendables. Don't worry about it. Let me see. David, do you use the price ladder to enter, and are you swing trading or day trading crude? Yeah, I'm sorry. I got way behind on the live chat when we were trading. You saw the kind of trading that I'm doing. It's scalping. It's high-impact scalping. You saw how fast that breakout happened. I'm in and I'm out. I mean, if they're going to give me multiple contracts, 8 ticks, 10 ticks, and I'm going to walk, with $500 on a scalp, I'm taking it and I'm walking. I have no desire to take a position in the oil markets. None. Not right now. Listen, you can see the market crash. You see somebody come out and declare peace and a ceasefire, and all the oil supply comes back online. The futures oil markets will crash. Oil will go down in a big, big way. If they do not, if the war escalates and you start blowing up places like Karg Island and there's a ground invasion potentially in the Strait of Hormuz, then you're going to see the war escalate, crude oil prices go way up in the short term. There's no question about it. So for me, I can build a case for either side of it. I believe ChatGPT and Claude both said they liked it at $75. I think they're liars. I think we probably go hit 120 before we go back to 75, but anything's possible. So I'm not interested in taking a position. I'm interested in grabbing scalps. That's for sure. I'm into grabbing scalps. Let's see. Do you use price ladder to enter crude? Yeah, that's what I do. I use it's called a trading DOM, a depth of market. I use that to set my orders, my entry points, my stop losses, and my profit targets. And a lot of it's just because I've been watching price for so many years that I have a pretty good idea. I can feel it pretty good when when it's highly active, you tend to shoot for a little bit more money. Whereas when it's really slow, you're going to be in it. Maybe instead of going for 15 ticks, you go for 5 ticks, something like that. That's for sure. Ralph H., good to see you. Ralph, how important do you think the previous day and previous week's highs and lows is? Crucially important. To WTI crude, I always know where they're at. Typically, you see price action increase or you see volumes increase like around a previous day's low. Of course, I'm running my mouth, and there's our point of control trade. That was perfect, wasn't it? Yep, there it was. We got a sweet 240. Yeah, you can't beat that. That's too bad. I wish we had market replay going. Not a bad little session's work here, just trading crude, huh? But look at it. There it was. There was your big sell-off. We played the washout, washed all the retail longs out beneath the daily range. Not the daily range, the intraday range, the New York range. And then what happened? We bounce right back up to that point of control. We test the point of control, and now we come off. So at least for right this minute, the sellers are in control. You could actually just be looking at this lower value area now late in the day, maybe looking to bid 95.50s. It's not a horrible trade. Not a horrible trade at all. But maybe we should make some videos and some tutorials. Those are fairly complex That's complex stuff. It's like if we were playing guitar or something, we could sit down and maybe play a power chord and a rock song. That's classical there. A lot of that is being able to apply what you've learned over the years and have a good feel for the markets. That's how the old pit traders used to do it. They didn't get too much into charts and things, but they had a feel for it. They could feel it. And that's where a lot of these concepts come from, especially that point of control and the value area stuff. All right, so let's go ahead and turn all that stuff off. And I will tell you, Ralph, that I always know exactly where they're at. You've got to know where your daily previous day's highs and lows are at. So what do we have right here? Previous day's high was right up there at about 99.78. What did we do? We went right up there to about 148. Not really a huge run, big-time reversal. You could almost call that a failed auction, but we could almost guarantee that there was a bit of a washout right above that level. So let's dial it in exactly. That high is 99.78. So what do you think happened at 99.79? Think there were sellers there or buyers there? Let's go ahead and have a look. That was your high. That was established right before the market closed yesterday. The futures market closed. High, 99.78. What happened? Look at the volume. That was our 9:30 spike. So that's 11:30 Eastern, but 9:30 my time, mid-session. That volume came out of nowhere. Where do you think that volume came from? Came from the action that developed right above yesterday's high. Let's go ahead and see if we can nail this down. Let's go to a 1 minute, see what happened. And there it is. Volume picks up. You run yesterday's high. That's your crescendo. What did we break from 79? 79 went all the way up to 100. So that's a 21 tick move. Doesn't look that big because of the size of the price bar, but take a look at that. We went right to 100. Sellers and buyers stepped in at 100. We had a hell of a fight. Inverted hammer shows up. Reversals, high for the day. It's good stuff. So that is prima facie evidence, Ralph, that yes, you need to know where your previous day's highs and lows are. If for no other reason, then you know they're going to attract participation, especially in a supercharged market like WTI crude. No question. The other one you've always got to know is gold. You got to know where those levels are in gold. Have to. All right, everybody, I've droned on long enough for this to turn into a long workshop, but pretty good stuff. I hope you enjoyed it. If you have any questions at all on crude oil, head on over to How to Trade. Dial me up, send me a private message. I'll be sure to answer. Just remember that if you are going to get into the crude oil market, it is volatile. So I highly recommend trading a CFD on futures or the spot market and reduce your leverage. You don't need to be, in a futures market, putting 4 contracts on. That's you need to know what you're doing because that is a lot of leverage and the market can get away from you so fast. I don't want to see you guys get burned, and crude oil can really burn you. But when it's flowing like it's flowing now, there's a lot of money involved, and it's a hell of a lot of fun to trade. No question about it. All right, everybody, I'm going to go ahead and get out of here for the day. We'll be back tomorrow with a more conventional stream. Bring your questions. There'll be a trade idea out a little bit later today. Friday strategy session, bracing for weekend volatility. We'll go over some key market drivers, cover all the big markets that are in play, probably some other trade ideas that we have live. I didn't even talk about the BOE, the BOJ, or the Swiss National Bank. So we're going to focus on those as well. And like I said, if you have any questions at all, be sure to head on over to How to Trade and check out private message perhaps. And then if you want to trade crude oil, switch markets, they've got commodities. They've got everything that you need to be successful in the markets. All right, everybody, have a fantastic trading session as always. My pleasure to be here. Sure, thank everybody for showing up and trade the action well. We'll talk soon. See you.